Vikas Khemani, founder Carnelian Asset Management. Vikas, the main plank of this government's politics, or one would say this entire canvassing has been Vikas, right? In fact, you have come out with the Amrit Kal fund as well. Now, will the speed of that Vikas get challenged if the numbers are not exactly as per market's estimates as far as the actual poll is concerned? Do you think that the speed of Vikas and the reform process, something which the street actually got sold out to, could get impacted, and that is a bit of a risk?
Ajay, I think clearly, if the question is that if let's say government gets majority and but below market expectation, answer is no. I don't think anything will change. I mean, there might be some psychological or emotional reaction in a shorter term, saying markets government won't be able to carry out this reform, that reform. But I don't think structurally speaking anything would change. Of course, if market is if an outcome where this current government is not able to form the government, then I think there will be serious. Questioning about the pace of the reforms and potential disruption of the growth, all those things. So I think that's the one thing that I should very clearly keep in mind. As far as my view is concerned, I think this government is coming back. You can argue whether it is coming back with 300, 350, or 400, but I think only we will know in some time. My own view is that they will probably likely to get between 350 to 400. But frankly speaking, it doesn't matter even if it is 300 or 350, because they are able to have a majority in Rajya Sabha, they would have a majority in Lok Sabha. So they should be able to carry out a lot of things which they have been continuing.
Vikas, hi, morning. And you were also part of the CIO poll that we conducted. You don't believe that the election will mark or rather the election outcome will mark a top for the markets this year, do you? Because it seems like somewhere the markets are already baking in the good and already moving up. We're already at 23K on the index alone.
I think so. I think, ultimately, once the election is out, big event is out, uncertainty would be over. I see two things. I think focus will be back to fundamentals, earnings growth, which I think currently is looking quite robust. Secondly, I think probably a lot of international investors and some investors who were sitting on sideline, given this big risk event as people were perceiving, those kind of money flow might start happening. So even if you start seeing some money flow coming, my sense is that we will start getting a lot of flows from FIIs, in later part of this year, especially when the rate cut cycle starts in US. So you will see liquidity also driving a bit of valuation higher. So I see markets remaining quite positive, quite robust. And I don't think markets post-election would be a peak. Of course, corrections would come. I mean, nobody can sort of rule them out in a journey of returns. The markets would be. I mean, recently we saw correction happening, so corrections would come out for many reasons.
Vikas, hi, morning. So, just from, capitalizing on this very theme, just to understand what exactly the division would be when it comes to looking at the large caps, would that be the focal area in terms of where investors should be concentrating their wealth? Would it be spread across mid and small caps as well? Or is there a sense that there could be a little bit of consolidation?
I think investment philosophy should not change, or portfolio construction should not change based on, in let's say whatever happens. I mean, assuming that continuity happens, your investment philosophy should remain cross cycle similar, right? I mean, I have no doubt in my mind that India is in one of the best wealth creation cycle over next 8-10 years. And if that is the case, of course, mid and small cap would tend to create a lot more faster wealth than the large caps. But having said that, even large caps tend to create reasonably good amount of compounding. So it's a philosophy. Each person has to decide based on the risk appetite of the person. But I mean, I do believe that we are in one of the best wealth creation cycle, and hence that should continue. Any continuity will only further that confidence.
Because I want to understand, your positioning on PSUs, or which end of the PSUs you still find value, and where exactly are you trimming positions? Because clearly PSUs, both banking and non-banking, defense, railways, what have you, have been the key vehicle, or market has played this, government's reform stance via these PSUs. But that trade has played out a bit as well. So where are you trimming and where are you still holding?
I think so. We don't look at PSU per se as PSU. I think within PSU also, wherever we saw good, governance part continuing, growth part continuing and undervaluation happening, those are the places where we find value. So PSU banks is something we have been quite positive and we continue to remain positive. But let's say for that example, oil and marketing company, we have not been at all buying because the governance is not fixed. It's a lot more political. So government interference keeps on happening every time price of oil goes up and down. So we basically prefer where there's a tailwind of the sector, when there's a least government policy interference is happening, it's more run by the individual banks, individual organization, then the leadership of those organization has to be good. So I know we've been kind of approaching from that perspective. So we've been, continuing to hold most of the PSU banks. We bought companies like BHL, where there's a sectoral tailwind happening in the entire sector, especially the thermal power space and defense. So I think some of these things more we look at bottom up ideas where the leadership has to be there, tailwind of the sector has to be there, and the governance has to be right.
Right. All right. The other space I want to talk to you about is the pharma space. Pharma and chemicals, if I may put it together, that's one of the big sector allocations. But look at the numbers posted by Divi's. It's come back very nicely. Even Aurobindo, though the market estimates were kind of elevated, but good numbers. Have you made changes, added some pharma chemical names in the last few months in your portfolios?
We've been quite positive on both these segments you did mention, and we've been overweight for last almost 8-9 months, and we continue to remain positive. Pharma, of course, has come out of a very long cycle, and we think that there are many more years to go. So there's no need to kind of panic and kind of get out or continue to remain invested. Chemicals, we did quite contra buying in last 6-8 months when most of the markets were selling off. And we think that, there's a lot more promise ahead. So both these segments, we continue to remain bullish and positive.
Vikas, is there anywhere within the entire market cluster where you would trim your positions or at least take profits off the table because it's looking toppish right now?
That's more company specific. It's not really, we don't, from sectoral specific, like I said, we are in one of the best wealth creation and earning growth cycle. So you can't really and the good part about this cycle is that there's a very broad-based growth happening. It is there in banking and financial services, it's there in manufacturing, it's there in infrastructure, it's there in consumption, it's there in, across the board, very wide, this thing happening. One of the things I can say that we recently, in last 5 years of our journey, we have not bought single or very few consumer names we bought, but we're beginning to now look at some of the consumer names which offer quite good risk reward. So I think, you never say never something, you keep looking at ideas and specifically, while some of the segments like defense, railways, where you find a little bit of excesses you avoid them. But I can't say the whole segment is kind of, uninvestable. So you kind of avoid where there's excessive valuation or excessive euphoria getting built. And look for where there's a value and look for where, at least you understand the drivers of the growth.
When you say consumer, what exactly are you referring to? Are these some of the FMCG consumer names where commentary have been good about rural recovery, or is it some QSR names or anything else? What exactly do you mean?
What some of the, consumer, discretionary as well as non-discretionary. So FMCG players we have taken. We never invested in any of them last 5 years. We felt risk reward was not in favor. But we're beginning to see some interesting, opportunities. So both in discretionary as well as non-discretionary, first time we are finding overweight situation in our portfolio in the consumer.
It's great to have you on the show. We'll let you go on that note. Thanks as always for sharing in your views.
Thank you very much. Thanks for having me.
If you like this video, then like, share and subscribe to ET Now.